Why on earth would someone deliberately lose money, you might be asking? Well, what if I told you that most financially savvy people actually do this? The art of deliberately losing money. Before we begin, this is not legal or accounting advice, and you should speak to an accountant if you want to explore this as individual circumstances vary. If you want to become wealthy, in many cases you need to change your mindset to be open to things that are so contrary to regular thinking that they sound completely wacky, but in fact actually make financial sense. Let's start with an easy to understand example and a mistake I've made before. For example, logic might say if you have a home loan, let's say your home loan interest is 3%, and this month after you pay your monthly amount, you then have an excess $500 left after all your monthly expenses. You could keep that in your bank account at a return of 0.1%, or it might be a high earning bank account with a full 1% bank interest. So 3% is better than 1%. So it's better to put the $500 in your home loan, right? If you keep it in the bank, you gain 1% but lose 3%. So you are 2% worse off. If you put it in your home loan, you save 3% but miss out on 1%. So therefore you gain 2%. Most people think this way, but actually both are wrong. Because on average, you'll make more than 4% on the stock market per year over time. So therefore you're better to pay the bare minimum on the home loan and build more wealth by reinvesting into the stock market or even saving up to another property. The stock market does go down at times, but over time it has consistently outperformed the home loan rates you can get in most cases right now if you're eligible. Granted, this is a riskier approach, but it is a calculated risk. So that's an example of how most people think the option is quite clear but haven't looked into other possible options. Deliberately losing money works in the same way. It should be pointed out before we get into how that works. Some people take this way too far and do it in an illegal way, which is absolutely wrong and you shouldn't do that. To make an important distinction, there are three key terms that may seem similar but are extremely different in terms of their legality. The first is tax avoidance, which is illegal. The next is tax minimization, which can be both legal and illegal if, for example, you take it too far or are dishonest. The third is tax planning, which is legal, unless of course you include illegal elements into your plans. So the way that taxes work, if you make money on one thing, you can then offset that taxable income by losing money in something else. So if you make 100 grand on property, but you lose 100 grand on stocks, then you have broken even. So therefore you theoretically won't owe any tax money. In financial terms, this is also known as capital loss. So where this could be illegal is if you sell it at the end of your financial year, then just buy the same investment back a few days later when the new financial year is started. However, in many cases you could buy a similar asset that's distinctly different but still similar. So for example, if you own shares in an ETF fund, you could buy another ETF fund. If you sold one house, you could buy the house next door. There are also tax write-offs or classifications that enable this type of loss. For example, in the US, there is a 1031 exchange where you can buy a new investment asset to replace one you sold. Here in Australia, if you sell a business under certain circumstances, if you were to buy a new business, you can offset the tax of the profit from selling your business by buying that new business. Again, you would really need to speak to an accountant if such a thing would work for you. However, I'd always been surprised how here in Australia, so many people in business who sell their great business go on to buy a business that on its surface looks relatively terrible. Now, they can probably turn it around, but they are also saving a lot in taxes, so they essentially get a percentage of what they spend on the business offset by the savings that they would have to pay in tax anyway. At a certain point, when you hit the top tax brackets, it would be better to spend the money rather than pay 40, 50, or even 60% taxes depending on where you live. So for example, if you have a rental property, you might be better to spend money on fixing it up and therefore lose money on it than to have the income from tenants be pure profit. This is also valuable in situations where you might earn different amounts in different years. So if you earn right on the edge of the top tax bracket this year, however next year you might be in a lower income tax bracket. So it would be better to spend this year and decrease your taxable income this year, rather than wait and make that money next year. As I said, this can go way too far, where people manipulate money between countries and create fake loans and so on, which is illegal and shouldn't be done. The last people you want to take advantage of is the tax department, because in every country they are the strongest department in investigating dodgy setups. So don't avoid tax, but you can take legal steps that allow you to plan and make the most of your financial situation in a legal manner, which an accountant could advise you on for your individual circumstances. It also becomes a personal or business decision as to whether you would be better to spend money so you make less profit, rather than paying the percentage of tax that there would be if you hadn't spent the money. This same principle goes to YouTube, where people buy sports cars for their videos. A lot of these people know it's a terrible business expense, but because it's for their business, it's not as bad of an expense as it looks just to buy a luxury car basing judgment only on the cost. Also, definitely at one point, people would just watch a video with a Lamborghini in the thumbnail, so it probably made plenty of people a lot more money by making what many others would consider a poor investment without knowing the full background and just by looking at it as an expense on a car. That doesn't mean just go out and buy a luxury car, but instead think about what is a luxury car for your circumstances. This principle also occurs in businesses, and an obvious example is loss leaders in supermarkets, where sometimes they will intentionally sell items at a loss to get you in the door, because they know if they sell cheap milk or cheap chickens, for example, then it's unlikely people will just buy those items. Do some people just buy those items? Sure, but most people are going to do a full shop or will be tempted by a chocolate bar at the counter and so on, and it only takes one person buying a full family's groceries to cover the cost of those loss leaders. Let me know in the comments what you think would be a good way for you to intentionally lose money. As always, this is good food for thought and to open your mind up to new ways of thinking.